Hi and welcome back to Cheeky Crypto. My name is Nick, and today, guys, we're going to be jumping down into the world of Bitcoin, taking a look at what's been going on and what we think is likely to happen next. As I get into the video, if you find it useful and informative, smash that like button. I do appreciate that. If you're new to the channel, then why not go ahead and subscribe. Tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord, guys, check it out, linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. So why not go ahead and check it out. Okay, let's make a start with this one though, guys. Here we have Bitcoin paired up with USDT on the weekly chart, and Binance is the data source. We're going to talk a little bit around the weekly close, what happened late yesterday, and what that means for Bitcoin. But what we're going to do is we're going to start things off just by taking a look at the upcoming events this week. So today is President's Day, so the market is closed over in the US, so I expect today to be reasonably slow, nothing terribly too much. We've got the FDI over in China, so that would have actually happened just actually before we went and recorded this video. So that's kind of done and dusted. Now, tomorrow on the 21st of February, we see the European Union's new car registrations. We can see the UK public sector's net borrowing. We have the euro area's economic sentiment, Germany's economic sentiment, and Canada's core inflation and inflation rates. So tomorrow might be an interesting day, but I don't think overly it's going to move the markets massively. On the 22nd of February, New Zealand's RBNZ interest rates decision. We'll have the Germany inflation rate, the CPI data. We'll have Russia's full-year GDP growth for 2022, the USA's FOMC minutes. I expect that the 22nd of February is the one that's going to move the markets. And we'll talk about the positioning of the market at the moment, and if it doesn't improve, what that might mean for Wednesday evening. Now, over on the 23rd of February, we have the euro area's core inflation rates, the inflation rates, the CPI, and then Japan's inflation rates. So again, we would expect to see some kind of movement in the market on February the 23rd. Over on the February the 24th, so Friday, UK GfK consumer confidence. Then we have Germany's GDP growth rate, the GfK consumer confidence. Too many letters in this these days. USA, we have the 2023 Monetary Policy Forum, the PCE price index, the personal income, personal spending for January. So it looks like we're probably going to see a pretty volatile week. So today's a bit of a rest day before I think everything kind of kicks off. Now, as it stands at the moment, we are sat at a 58 on the greed and fear and greed index. So it's quite greedy. It's come down a little bit, but it has to come all the way down to the fear, in my opinion. So it is quite interesting. From a sentiment point of view, we can see that the majority of positions at the point of recording are to go short, 58.1% going short and 41.9% going long. I actually feel that's about right, but we can see by platform it's not necessarily fully balanced in that way. There's a lot of shorts on some of the smaller platforms, with the larger ones being more 50-50 based. It'd be interesting to kind of see how that goes and plays out. In terms of liquidations, only 122.83 million. It's actually quite small, but I expect that to kind of change quite a bit. Majority of positions were long positions that got wiped out. We can see that Bitcoin, Ethereum take the top two spots, followed by Sol, File, Blur, and XRP. We can see the biggest amount of liquidations, 43.36% of liquidations were Binance, 53 million. Bybit in second place at 23 million. 23% at 28 million. OKX 18 million and 15%, as you say, is long positions. The biggest liquidation was Bybit, Bitcoin, USD pair, and it was for 3.65 million. So pretty meaty amounts. Let's go ahead and jump into the world of Bitcoin, though, right? So as I said, Bitcoin paired up with USDT on the weekly chart, and Binance is the data source. Now, with this, we were talking about this yesterday afternoon. Essentially, we were looking at these particular wicks over on this side here. Okay, so this entire yellow box area that comes across here is our supply area. Okay, and down here is our demand area. So this supply area is basically where sellers are. Okay, and we can see that this is the upper resistances. Mainly, we really got hit back here in August of 2022. Okay, not only is this also a rejection on our 200 EMA, this one here. Okay, you can kind of see that right there. And yesterday we actually did close above the 200 EMA, which is the first time on this chart. So that's going to be interesting to see what that means overall. Now, if I remove the EMA, we can see that we were talking about the 24,300 and $5, right, essentially. Now, the $24,305 was the position that we were looking to either close above or below, and in an ideal world, we actually wanted to close above 25,211 to give us that kind of super bullish feeling to the upside. However, we did actually close down lower than that 24,305. It was a closed position of 24,271, meaning that our supply area remains intact. Although we're just pushing up into this range right now, again, it doesn't mean anything because our closed candle position was below. So what we're looking for here is another week. Are we going to be closing above the 25,211, or are we going to now slowly work our way back down after getting rejected from this key area? Now, the obvious, which was the fact that we have now closed above the 200 EMA for the first time, it's going to be interesting to see what that means for BTC. Okay, so if I come up to our one here, this is the Bitcoin USD on Bitstamp. Okay, this actually shows us as not crossing the 200 EMA. This is because it is USD and not USDT, so it's a different trading pair. I mean, you can see that we are getting rejected on the 200 EMA. Okay, so I'm not sure if the USDT pair is going to be meaningful or not meaningful and all that kind of stuff, but you can see that the second that we do cross the 200 moving average here, normally it's pretty good sign. So the fact that we got rejected on this chart from here, it could mean that actually, we are still bearish. We're not bullish. And I still think that is very much the case because we got rejected from this area anyway of the supply. So sellers and the bears were able to bring the price of Bitcoin down lower. So I still think this is incredibly bearish. Now, from our weekly chart here, we can reflect on the fact that we are overbought. Okay, overbought we have been for a little while now, and we are looking for a price correction. So last time that we were overbought was in October of 2022 before FTX took us down into the new fresh lows. I'm not saying that we have to do the exact same thing, but we are where we are. Okay, so it'll be interesting to kind of keep a close eye on what happens next when it comes to BTC here. The time before this, so when we were overbought, we were up here and it was at the $48,000. Okay, so $48,000 took us down to the $17,000. Okay, before we were oversold. Then, of course, we went up to August 2022, that high there, which is around 25,000. And then we came down into the lows for November. Right now, we're back up in the overbought area, and we've barely been able to break the previous highs. This is basically essentially a double top, and we can be looking at a pretty bearish move to the downside. As you can kind of see, I am kind of worrying that we have this move to the downside that is of substantial difference. And it'll be interesting to kind of see how this plays out over time. We could be a really, really long bear market, but we'll see how it kind of plays out. We're not in a bull market, despite the fact that people really, really want that to be the case. The economic climate really does not support such a thing. Now, if we go ahead and throw in our volumes, you can see that there was a spike in volume yesterday, a little bit above the normal areas, but again, it isn't really giving me the confidence behind it. An RSI is quite high, and there is no divergences on our weekly chart, so that's all positive. So for the most part, my expectations are that we are going to start to see a bit of a move to the downside. But again, we can take a look at the daily positions, and we can also see that we're now up in this overbought area as well on the daily. So again, lining up quite nicely with our weekly. From a smart money concepts point of view, you can see these fair value gaps that have been left behind. The expectation is to eventually move down and take them out of play. We are right up in the premium area, which is now a strong high. Right here, it's a strong high. It's a strong high because we've been rejected from this area quite a bit. 1, 2, 3, 4 rejections right up here in this premium area. Okay, so chances are that we're going to be looking at that equilibrium and moving down towards it whilst filling this gap here. Okay, chances are that if we cannot hold this area, we also fill this gap as we head down into this weak low, which is symboled right there, okay, and our discounted range. The fact that this is a weak low means that we're probably going to chew our way through it and continue to move on down. But we'll see how it kind of plays out. This is from the daily chart, of course, and we can see that this weak low is all the way down here at the $15,000. So again, that would be symbolizing to us that this weak low is saying new lower lows potentially are around the corner. There's a long way to go, so I don't think you'll be moving in a straight line. Instead, I would say that we're probably going to have to bounce around a little bit and kind of see this kind of play out just a little bit gradually, move up a little bit and so forth, and eventually we end up down here. Okay, now as I said before, I would like it to be that 14K is where we kind of rest at some point, and we can just rally from there. But again, the background data doesn't necessarily support us at that time. Then obviously we'll be looking at deeper, going down deeper. Now, from my big concerns, we essentially are potentially looking at a move down into these low ranges of 7K. Don't want to do that. That's just my biggest concern, considering the structure that's starting to emerge here overall. Obviously, on this weekly chart, we have got several areas of support and demand to be found. Okay, so the first area of demand really is 17,600 to 18,800. Let's see how price reacts to that one. Lose that or lose the existing low, and really we are talking about 11,600 to 13,900. And then if we were to somehow lose that, we're talking 6,500 to 7,600. So there's a long way to basically go if we were to smash through a lot of these low areas. But we'll see how it kind of plays out. But for now, it does look like this is going to be our resistance area, and we are potentially going to be looking at a move to the downside from here. Let me know what your thoughts are in the comments down below. I'm going to leave this one right there. If you found it useful, smash the like button. If you're new to the channel, subscribe, and don't forget to join us down in Discord. Until the next one though, guys, have a fantastic day.